Hello, Marky Dragon, also known as Marcus Eikenberry in real life. And let's talk about cryptocurrency trading, about making money with cryptocurrency, and what the new tax laws in the United States that are coming in January 1st, 2018 are going to do to us. So it is the IRS code, specifically 1031, in this new bill that was passed last week and goes active January 1st, where previously, when you were to do exchanges with cryptocurrency and you made money, only when you cashed it out were you paying taxes. At least that is how people were interpreting this. Now what they've done is they've made changes to distinguish virtual property from real property, and what this is doing is people who are long-term investment, you're probably not going to have too much trouble from this. People who are short-term investing, it's going to become a pain in the ass to you. And people who are day trading, you're screwed. Because these new laws, you have no way that you can possibly comply with what the IRS is asking for, and this is a problem. So let's just talk about that. Okay, so now with these changes, all trades are taxable. I'll let you think about that for just a moment. All trades are taxable, meaning that previously, it was only when you cashed out back to dollars that you paid taxes on whatever you gained from that, or you filed for losses, whatever. And now, say for instance, I want to send somebody some Bitcoin. I want to send them $100 worth of Bitcoin. Well, we all know that the Bitcoin fees are absolutely insane right now. So what do? I transfer it to Litecoin, and then I send them Litecoin. They receive the Litecoin, and then they transfer it to Bitcoin if they're wanting to have Bitcoin. Okay, all fine and dandy. Except now, when I transfer that from Bitcoin to Litecoin, I have tax exposure on that. So either I made or lost money or broke even, whatever. I still have to track it and everything. And so that becomes a taxable event. Then when I send it to the other person, it's a taxable event to them. And then they want to transfer it into Bitcoin, that becomes another taxable event to them. And so you can see where this gets maybe complicated, because now you're having to trace every single transaction and keep track of them. Okay, so now what happens if you are somebody who just does trades every once in a while? Like, let's say that you do 1 or 2 trades a week. Okay, not too hard to keep track of it, not so much a pain in the ass. But what if you're somebody who is trading constantly, multiple days a week? Let's say that you're doing 100 trades a day. And to keep track of that is a pretty insane venture, especially when the exchanges that we use do not have accounting records in them that help us with this. Now, yes, you'll say, okay, we have the accounting stuff in there, but here's the problem, is that the IRS wants us to convert each transaction into US dollars so that they can figure out what the tax on that would be. So just think about this. And you're doing all these trades, you've got a partial fill, or you've got a spread of you're buying or selling an amount, and it keeps going one tick, difference in price because your buy or sell is so big that it's going over multiple values and everything. You got to track every single one of those, how much it is, what it was worth in US dollars at that particular time. So just think about it in the whole Litecoin Bitcoin scenario. So I am taking Bitcoin and I'm buying Litecoin. And let's just say I'm doing this just for myself because I want to transfer it to another exchange. So I take the Bitcoin, it's currently worth $15,000. I transfer it to Litecoin, it's currently worth $250. I transfer the Litecoin over to another exchange, it's worth $255. I transfer it back over to Bitcoin, Bitcoin is now $16,000. So if I started at $15,000 on the first end and I transfer it back over and it's $16,000, and it was, let's say it was a whole Bitcoin worth, then have I gained $1,000? Well, if I just left it in the other exchange and it became $16,000, I haven't done anything with it yet. It's not a taxable event. And so all I did was move it from here to here, and now all of a sudden I'm paying $1,000, or paying taxes on $1,000 gain. So then maybe the trick is going to be, okay, I want it to wait till it's at 19 or 20,000 again, and I start the move, and I change it over to Litecoin, which is a taxable event. And how do you figure out what the dollar worth of each one of these are? Is it the same? I don't know. And then I wait for it to go down to 15,000 when the Litecoin is over there, and I want to change it back over to Bitcoin. And so then do I get to take a loss? Maybe we get to play this game. But just think of the complexity of tracking all of this. And you didn't go and do these moves for profit. You did them because you're moving from one location to another. That's all you're doing. You're taking it from bank account A and putting it in bank account B. Why should that be a taxable event? Bitcoin is not a good currency for movement, for moving it from one place to another, because the fees are getting really high. And Litecoin is really great for that. So we're being punished for that. And I think Congress, that they're techno-idiots. They don't understand. They understand what this stuff is. They're book smart in it. But how many of them actually have tried transferring stuff from point A to point B? Or maybe they just have so much of it that they don't care that Bitcoin is so expensive to move from one point to another. So now, none of the exchanges currently provide us data in a format to let us know what it was worth in US dollars at the time of the transaction, which means that you're going to have to start writing this stuff down by hand. And you're going to have to start looking at what all of these are worth, looking it up by hand on each transaction. And that's going to be absolutely killer if you're trying to capitalize on movement of markets and trying to press that button so that you can, do it in time so that you make as much money as possible. It's just going to slow down the process. It's really going to muddy it. Now, there's another thing. CPAs. This is really funny. I put a couple of links in the description. And these links, one of them goes to an article talking about this. Another one is to a Reddit post of somebody who's very, very upset with these tax code changes and how we are supposed to track each transaction. And so each transaction here being tracked, CPAs are chiming in. They are saying there is no way that they could track their own trades, let alone give advice on how anyone else could track their trades. And they're like, screw it. We're just going to have to use it on whatever we cash out, the way we have been. Whatever we cash out and we have gains on that, well, we pay the appropriate tax on that gain. But paying a tax or figuring tax on every single little step is really insane and impossible. So that leads us to an IRS audit. Okay, so the IRS says you owe us this money, you put it on your taxes, and you put that you've done all this, and I can't imagine how thick the printout would be of all your trades if you're a professional trader. And so now the IRS, let's just say that they audit you. Now here is a myth. A myth is that if you get audited by the IRS, that they have to prove that you owe more money. That is what most people on the internet are saying. I'm not going to worry about it because I've paid taxes, and if the IRS wants to audit me, go ahead. They're going to have to prove that I, owe more money or less or whatever. Well, the fact is that the IRS is not like the criminal court. You are not innocent until proven guilty. You are guilty until you prove yourself innocent. And they are not governed the same way as a criminal court. And so you don't have the same rights. You don't have the same, protections and everything. The government wants their money. The government's going to get it. And the laws here are much more harsh. Typically, people don't go to jail for these kinds of things, and except in extreme things where they're actually very intentionally evading taxes. But you're guilty until proven innocent. And so do be careful with this. I suggest that everybody starts logging the best that they can. It's going to completely alter how I treat my trades. I'm going to have to think now, how do I track this? And what's the best way to track it? Because it's not easy. And how do I figure out what its dollar worth is here, 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 and here? Now, thank goodness I'm good at spreadsheets. But what does everybody else do? You know? And what if you're using a bot for trades and it does 1,000 trades a day for you? I hope that bot software comes with tracking now, because you are absolutely screwed. So give me your comments below. Love to hear from you. And may 2018 be very profitable. It's going to need to be to pay all them taxes. I'm Marky Dragon. Take care.